The tariff wars are upon us. With China, they are now slapped with an additional 10% importation tariff on anything and everything that they are importing into the US. With Mexico, that's going to be a 25% increase. And for Canada, that's going to be a 25% increase on all imports. But for oil and gas, that's only going to be a 10% additional increase in tariffs. So what exactly is a tariff? Let's go ahead and say Apple is importing a shipping container full of iPhones from China. They're going to have to pay the tariffs to the US government in order to bring those phones into American soil. So in simple terms, Apple is punished for doing business in China. So why these countries specifically instead of Sudan or Indonesia? Well, in 2023, Canada sent 76% of all of their exports to the United States, which accounted for roughly 19% of their entire GDP. In 2024, Mexico sent 78% of all their exports to the United States. That makes up 37% of their entire GDP. In contrast, for the US, our exports to both countries combined only accounted for 2.7% of our GDP. So, in this trade war, Mexico and Canada have much more to lose and will suffer greater consequences the longer it goes on. It's like doing the dishes. The lazier you are and the more plates and spoons and utensils you just throw into the sink, the bigger the pile gets. And then having to do 2 to 3 weeks worth of dishes at one time, it sucks. Anyways, back to the video. Okay, Mr. Dividend Compounders with cheese, why are tariffs happening? This is absolutely sinking the stock market. My portfolio is deep into the red. What is going on? Okay, bottom line up front, tariffs are going to make the goods that are sent to us from those countries, Mexico, Canada, and China, cost a lot more for the consumers because companies are going to have to pass on those extra costs like they always do. So if they usually buy a material or a good for $100 imported from Mexico, now they're going to have to pay $125. Do you really think a business is just going to eat those costs? Absolutely not. So everything and anything is about to get a lot more expensive here in the US. So in theory, the US consumers are going to buy less, spend less, and hurt the top line and bottom line for all of the businesses that are operating out of China, Mexico, and Canada. So Trump's game plan is to have those businesses move their operations in the US to avoid the tariffs. Manufacturing, production, and operations, which ultimately align with his rhetoric of making America great again. In addition, if foreign-produced goods become more expensive, Trump hopes that consumers will buy the American variety instead. For instance, if you're in the market for a new car, you might buy a Tesla instead of a Toyota when you see the higher sticker price for the Toyota. Or if you go into a grocery store and you have the option to buy American agricultural products, you're going to do that instead of the fruits and veggies that are imported from Mexico. And here's some business 101. In the last 50 years, we moved most production and manufacturing out of the US and into other countries because it's a lot more cost efficient and better margins for businesses. About 30 years ago, almost all the shirts and sweaters we were wearing were made in American factories. This includes shoes, socks, underwear, and even jackets and man bras for your big titties. However, as of right now, that is not the case anymore. Almost all of my clothes, I don't know about you, but almost all of my clothes are made in Vietnam, Mexico, or other parts of the world. Now, you're absolutely right. Bringing business back to the US will not be easy because overhead costs are going to skyrocket to compensate American workers to make the exact same sweater, which would only cost pennies in Vietnam. But that's the game plan with the tariffs. And ultimately, he wants better business and trade deals to be made with these three countries. So he's using tariffs as leverage and a negotiation tool to get these countries to comply with his terms. What exactly are his terms? Well, with China, he believes that China is overproducing raw materials and is flooding the markets with cheap metals to the point where it's hurting US manufacturers. So he wants to strengthen American steel, but also he sees China as a threat and as a copycat in the tech space. Whatever we do, China just copies and launches their own version in their country. I'm talking about when it comes to e-commerce, social media, stealing and reverse engineering our phones, laptops, and gadgets and semiconductor chips. So he would rather have tech be based in and made in the US. But he also cares about clothing apparel and industrial equipment. So how is this going to affect you? Everything that you like to buy on AliExpress, Temu or Amazon is about to get a little more expensive. Just be prepared. And with Mexico, he wants to stop the flow of illegal immigration sneaking in through Texas and California, near that San Diego area. Through tariffs, he wants them to tighten up their borders. If there's one thing that Trump hates more than big media that he likes to refer to as fake news, it's going to be illegal immigrants sneaking into the US. These tariffs are going to pinch the nipples of Mexico in the automotive factories, electronics, and agricultural products. Yes, this includes tequila, which means you're probably going to have to switch to whiskey. And for Canada, what he cares most about is oil and gas. Believe it or not, Canada is the largest supplier of crude oil to the US. In 2023, Canada accounted for about 60% of the total US crude oil imports, which is 3.5 million barrels per day. Yes, Canada provides that much oil to the US. And also, Canada is the largest foreign supplier of natural gas to the US. In 2023, Canada supplied about 90% of US natural gas imports. And another segment that's going to be impacted heavily is going to be lumber. So companies that do home building are going to have to eat those costs. And unfortunately, the Canadian maple syrup that you like to use for your pancakes in the morning for breakfast, yeah, that's not going to happen anymore. It's going to be too expensive. However, you have to understand, Canada, China, and Mexico is not just sitting there and taking it, because the leaders of those countries need to show face and prove that they're not weak in light of Trump doing these tariffs and threats. In fact, they're responding by increasing tariffs against the US as well. And remember, the US relies heavily on Canadian lumber, Chinese manufacturing, and Mexican produce. Hence, the tariff wars has started, friends and family. So why exactly is Trump doing this? Well, let's refer to the big picture vision and the numbers. Yes, he has a team of economists that are whispering into his ear dirty things, but also numbers that makes his PP really hard. For number one, the tariffs are proposed to generate between $150 and $200 billion for the US almost immediately. And if these tariffs are made permanent and they stay in place, the US will collect between $13 and $15 trillion in profits by 2035. And of course, he wants to protect and create American jobs. And number four is to pressure China, Canada, and Mexico into trade deals that are favorable for the US. But the bigger question is, will the tariffs work? Well, in the short term, it's absolutely going to work, and it's going to suck. The prices of most stuff are going to increase on Amazon, in Home Depot, even in Target or Walmart. And this might, in worst case scenario, lead to an economic decrease and recession in the stock market. Or at best, instead of getting a haircut every week, you're going to have to grow your receding hairline for about 3 weeks before the next cut. Yes, you're going to have to do that very embarrassing comb over to hide that shiny bald spot in the middle of your head. And in the long run, well, we don't know what's exactly going to happen. Now, I can talk out of my ass and say that the lasting effects could be pretty ugly and lead to slow GDP growth or even the collapse of the US being a superpower nation, but talking like that does nobody any favors and it reminds you of your ex-wife, always talking negativity into your ear. However, on the flip side, if we think optimistically, in the best case scenario, with countries rethinking how they do business, they'll open up more factories and production in the US, which is going to eventually lead to a stronger US economy, more jobs in the US, and less reliance on foreign countries to make our stuff. Do you remember during the pandemic how messed up and disrupted the US supply chain was because we relied so heavily on foreign countries to make our stuff and to import their products? And even today in 2025, especially with the geopolitics of China going on and most of our chips and electronics being made in that region, this could ultimately be a good thing. All that to say, only time will tell how all of this is going to pan out. And that's why the stock market is selling off right now, because they hate uncertainty. They don't know what's going to happen. Not you, not Trump, not Canada. Nobody knows. However, with that said, some companies are already improvising and adapting to the tariffs by opening up their manufacturing and factories here in the US. Believe it or not, Honda, a manufacturer of cars that I'm a huge fan of, the S2000, the Honda Civic, the Accord, I think Honda makes fantastic vehicles. Anyways, instead of making the parts and the cars in Mexico, now they're going to produce those Civics in Indiana in the Midwest. But alongside with that, chip-making giant TSM, they're also going to invest $100 billion in the US in order to open up more manufacturing facilities and not allow Intel or Texas Instruments to catch any ground or market share in the chips building space. Now, with all of that said, what is my game plan? Well, I think of the sell-off in the stock market right now as an amazing buying opportunity. You can call me a bull, you can call me an idiot, but I really think, especially for first-time buyers in the stock market or if you're new, this is the perfect time to jump in when everything and anything is on a discount, including high-quality companies. For seasoned veterans that have investments already in the stock market, to you guys, I would just say wait it out. Weather the storm. Because in due time, you're gonna be okay. Refreshing your brokerage app every 2 minutes while you sit on the toilet is only gonna make you feel worse. Yes, you already have diarrhea, but do you really want to see the pain and the emotions of sadness, especially if you are in the red right now because of the recent sell-off and correction? All I'm trying to say is panic selling is probably the worst answer and choice to do in light of the tariff wars. You're better off shoving a pineapple right up your booty hole than selling for a loss. Unless, of course, you're trying to offset some capital gains or you want to carry over those losses for the next year. As for me, my game plan, I'm going to buy the companies that I thought were once too expensive. The sell-off means that I can finally buy them at the price that I think is fair. Maybe even Costco with their stupid and ridiculous valuation. If they go enough into the red, I might be able to buy a share or two. And a gay man once told me that more money is lost planning to buy the dip and waiting for it to drop further than the actual dip itself. Timing the absolute rock bottom is gonna be impossible. So in other words, I'm going to continue dollar cost averaging into these high quality companies that have been on my watch list for like 2, 3, 4, 5 years. So business as usual, because I know the worst thing to do is to sit on the sidelines and to be scared and to just be skeptical and just wait it out. That's not what I'm gonna be doing. So if you don't get it, my game plan is to go to work, earn money, and invest into stocks. I'm gonna dollar cost average. I'm going to squeeze my nipples or put my foot where my mouth is. How does that phrase go? I'm going to put my money where my mouth is. Yes, I'm going to do exactly that. Especially into companies that are not going to be impacted by the tariffs, but they're just caught in the crossfires. Very high quality dividend compounders with cheese that are just going on an unjustified sell-off. I'm talking about Google. I'm talking about the military stocks. And if you want to hear what else that I'm buying right now, then watch the video that I just uploaded talking about just that. By the way, if you like this channel, please do me a solid, click like, leave a comment, it really helps out. It tells YouTube that I'm not an idiot and that my content actually doesn't suck. If you choose not to, that's okay. I love you guys, stay safe, and good luck in the stock market, and I'll talk to you next time. And by the way, the situation in Japan has not improved. It's cold as heck, it's snowing, there's pollen everywhere, I have to wear a winter jacket in my house. It's hilarious. Anyways, I love you guys. See ya.